Financial inclusion is one of the key objectives of fintech. Even though we've made some advancements in the last decade and brought more people access to financial services, globally, there are still up to 1.4 billion adults who remain unbanked. Digitalization is critical in building on that momentum to include the millions that are currently excluded but need financial access the most. Fintech has a major role in reigniting the global economy in a post-pandemic world. It has the power to boost economic growth and support industry innovation. Financial inclusion is so critical that even in the Sustainable Development Goals set out by the UN, it is identified as an enabler for ending poverty and hunger and achieving gender equality. So in this video, I'm going to talk about how fintech plays an important part in driving greater financial inclusion. If you're keen, then let's talk about it. Hello friends, welcome back to the channel. My name is Jeremy, and if you're new here and haven't yet subscribed, please consider doing so because on this channel I speak about fintech, digital transformation, personal and career development. Financial inclusion is defined as the availability and equality of opportunities to access financial services. Simply put, it's the process by which individuals or businesses can easily and securely have access to useful and affordable financial products and services like payments, transfers, loans, savings, and insurance. One of the best reports out there on financial inclusion is the Global Findex report. The Global Findex measures people's access to financial services, meaning having safe, private, and easy ways to store money, access credit, and make payments. Financial inclusion brings more people into the global economy and also makes them resilient to crisis and emergencies. Without access, people use informal mechanisms like cash, which is less safe, less reliable, and more expensive than formal methods. COVID-19 accelerated digital payments. In developing countries, for example, 33% of adults pay for utility bills from an account for the very first time since the COVID-19 pandemic started. Governments, traditional finance providers, and fintechs can help expand financial access and usage among the unbanked by lowering the barriers and improving infrastructure. But today we're going to focus on financial technology and its potential to close the financial inclusion gap. The first way fintech drives financial inclusion is accessibility. Fintech makes financial services more accessible by lowering the costs, increasing convenience and efficiency for users, and providing financial opportunities where they previously were unavailable. For example, the Findex report again highlights that 33% of adults in Africa use a mobile money account. It allows people to safely and affordably store, send, receive money for everyday needs. It enables them to plan for emergencies and make more productive investments in the future, such as in health, in education, and business. Thanks to innovation in fintech, the World Bank has stated that 1.2 billion previously unbanked adults gained access to financial services in the past 10 years. The unbanked population has decreased by 35%, owing largely to the popularity of mobile money accounts. This goes to show how fintech holds the key to bridging the gap of access by creating convenient, user-friendly channels that even those with limited education can find utility for. Next is security and fraud prevention. Financial services are now safer and more secure thanks to fintech. All financial services have a built-in risk of security lapses, fraud, or theft by users or online thieves, as well as hackers. Fintech uses cutting-edge technologies that are revolutionizing the financial industry to try and reduce these risks. For instance, several finance businesses provide biometric security using fingerprint and facial recognition technology. On desktop and mobile devices, these technologies offer quick and secure access to fintech software. In practice, this lessens the user's burden of having to remember complicated passwords, and a user's digital footprint is left behind each time he accesses a fintech platform. Now, this digital footprint creates a digital paper trail which reveals when and what the user did on the platform. This results in a substantial reduction in fraud as opposed to using traditional means of transacting such as cash, which is essentially anonymous. Next is competition and innovation. Fintech has also improved delivery techniques, which has changed how financial services are provided. The foundation of the fintech sector was the notion that larger, more established financial institutions may be overtaken by smaller, more nimble rivals operating online with lower costs and less compliance requirements. Lean teams of specialized experts are frequently used by fintech startups to quickly create an innovative product or service. This creates an increase in the competition to innovate and better serve the needs of the customer. Traditional institutions institutions like banks then have to improve the efficiency of their processes and reduce their operating costs, which is definitely a win for the customer. Next is alternative lending solutions. Fintech has also provided financial access to businesses that would not have otherwise had it. An increasingly popular fintech service for small business owners worldwide is alternative credit solutions. Alternative financial service providers reach out to SMEs in developing nations with loans, credit facilities, and payment services that big financial institutions do not. These smaller businesses like fintechs provide the chance for people with little financial history or wealth to access financial services. In addition, fintechs offer more competitive interest rates compared to those of the bigger financial institutions, which is more appealing to SMEs who simply can't afford expensive loans or have no collateral to pledge. In Africa, for example, alternative data such as that which is collected from the mobile network operators are run through innovative fintech algorithms to determine an individual or business's propensity to repay a loan. The scoring accuracy is so dependable that unsecured loans are able to be granted to the previously financially excluded population. Now, as fintech continues to expand globally and becomes better established, financial inclusion will continue to rise and we'll continue to see an increased shift towards alternative credit and lending solutions. Next is mobile financial solutions. Mobile phone ubiquity has opened up financial options for previously unbanked or underbanked communities. Financial institutions can reach millions of people worldwide with the use of simple, convenient, and accessible technology. Therefore, carrying out a financial transaction has never been easier because you can simply download the mobile applications from the financial institution's websites or app stores. So regardless of where their clients are, the financial institutions can communicate with them. Customers perform a variety of financial activities on their mobile devices such as money transfers, payments to businesses, and peer-to-peer transactions. By enabling consumers to easily access financial services from anywhere, financial service providers have broadened their product offering range. Offering financial solutions on smartphones in addition to in-person services allows financial institutions to access a wider clientele, thus driving financial inclusion. And lastly, we have empowering women. Women are disproportionately affected by financial exclusion. Including them calls for deliberate action and reaps great rewards for the society in general. Now, according to the Global Fintech report, in developing countries, men are 6% more likely to have an account than women. A prime example of the benefits of including more women in the financial system is 41-year-old Togolese mother of three called T'Challa Dahana. She embodies the informal economy prevalent across most of Africa. She makes a living by selling tomatoes in the market. While she can make ends meet, Dahana has little left to put towards her children's education, to make the needed improvements to the family home, or to travel around the country. She does not have a bank account, nor can she access basic financial services. This means she cannot take out loans, set up a business, or even store money safely. Despite her hard work, Dahana's prospects are constrained. Not having access to financial services makes it impossible to find a way out of poverty. Now, in 2017, she heard from a friend about a government-backed microloan scheme for which she was eligible. She applied and received a 30,000 CFA loan, which is about $52, and she was able to use that money to buy onions wholesale and then resold them in the market. Once she had paid off her initial loan, she took out 3 more microloans, which enabled her to diversify her business. Within months, she's selling onions, fish, and spices in addition to her tomatoes. With her business flourishing, she became eligible for a larger loan and took out 5 million CFA and became a wholesale retailer. Now, Dahana's story shows how much hinges on these first steps and how far small-scale support from the likes of fintechs can go a long way. There's no way of halting the positive cycle of financial inclusion powered by financial technology once it gets going. These mechanisms need to be reproduced since we know they function. The journey to achieve universal financial inclusion is still underway. Developing the pillars that support the ongoing fintech transformation is critical to its success. Despite mobile penetration being high among the unbanked, increasing the availability of 4G and eventually 5G services will provide the bandwidth to offer a more sophisticated range of mobile-first financial services to further narrow the financial inclusion gap. I hope you found this video valuable, and if you did, remember to hit the like button and leave me a comment. As always, you can grab your African-themed prints from Wear Ghana with the link in the description. Have an amazing week, and I'll see you in the next video. Cheers, guys.